How's your retirement fund looking? Have you opened up your 401k recently and gotten some of the statements and wanted to just pull whatever hair that you've got left out? 217-629-7970. That's the phone number. I want to hear from you. How things looking? Are you letting your investment advisors just kind of handle things and do the best they can? Is it like a fire sale? Are you just holding on to what you've got in hopes that the market turns around? This is obviously something that's impacting people who have to save above and beyond whatever other types of retirement offered, be it in the public sector. In Illinois, you've got the pension plans, which are also impacted by the stock market, just in as much as how much more taxpayers have to put into those. But if you're in the private sector, likely you have a 401k, a investment vehicle that you put in and that your employer matches. And looking at some of the most recent indications, of course, all of this is invested in the stock market. I pulled a couple of quick snapshots here of, for instance, the Dow Jones Industrial Average over many months, actually a couple of years here. And you can see it was ramping up quite a bit, and then all of a sudden it's on a downward trajectory. Same thing for the S&P 500, up quite a bit, and then all of a sudden it's on a downward trajectory. So what that ultimately translates to is you could be putting more money in, but if the markets continue on a downward trend, you're going to see some poor investments returns, and that's not going to spell good things for if you're close to retirement. And I really feel for those of you out there who are having to have your financial advisors do all kinds of different tricks with your money. You're probably going to have to segregate funds and to longer term things, but you still need to access your retirement account because you're retired. So it's real hard for those who are dealing with the retirement situation right now. But when I got a statement from my retirement account, it showed that some of the funds that I'm invested in, and I'm invested in a variety of different types of funds, different portfolios, and they range from down 10% to down 16%. In one instance, there's a fund that's down nearly 30% on the year, and even just the past 3 months, it's down 20%. And that's not really that good of an indication. Now, 5-year average, we're looking at single-digit percentage increases, but I'm putting in money in my retirement. So it's something that I think is alarming to a lot of people. And what are the economic indicators moving forward? We do have a whole host of different types of numbers that are going to be released this week that'll indicate one way or the other if we're having a healthy or a strong economy. One of those coming out on Thursday, and that's the GDP number. And the GDP could very well signal whether or not we're going to be in a recession or not. Here is Treasury Secretary Janet Yellen talking about the issue of what exactly is a recession, and are we going to see a recession? Here she is on NBC's Meet the Press talking about this very issue.
GDP will be closely watched. A common definition of recession is 2 negative quarters of GDP growth, or at least that's something that's been true in past recessions. When we've seen that, there has usually been a recession. And many economists expect second quarter GDP to be negative. First quarter GDP was negative.
So we could see another negative cycle here of GDP, of gross domestic product, and that number comes out on Thursday morning. So we'll review that because the first quarter of this year was minus 1.6. And it's possible you could see a 0.3%. That's at least what some are estimating, a 0.3% increase. But if that's a decrease in negative territory, that could signal inflation. And what that means for hiring could be negative. You could see jobs kind of retract a bit. and some possible layoffs. Now, an update on Rivian. If you remember, the electric vehicle manufacturer, they announced some job cuts, but none of the job cuts are going to be from the manufacturing plant in Normal. A company spokesperson said only non-manufacturing jobs will be affected by that announcement. So Bloomberg had recently said that the company was planning to prioritize certain programs and halt certain non-manufacturing hiring and adopt cost-cutting efforts. So we'll see how that plays out. But the ongoing economic concerns, ones that you're not going to get away from anytime soon, I don't think. And here is former Obama advisor Larry Summers talking about the possibility of stagflation and what that's going to do for individuals up and down the economic spectrum and how it's going to possibly last for quite some time. Here he is on CNN.
So I think there's also a greater risk of stagflation and this episode being with us for some number of years than the market is currently discounting.
So stagflation, kind of a sustained doldrum of sorts, a malaise of sorts where things aren't necessarily as hot as you would want them to be. But Summers also went on to talk about how, indeed, you've got a variety of other indicators like the likelihood of a recession, similar to what Janet Yellen had to say about the possibility of a ongoing recession issue if we see continued stagnant growth. So here is Summers talking about that particular issue, again, on CNN over the weekend, discussing economics.
I think there's a very high likelihood of recession when we've been in this kind of situation before. Recession has essentially always followed when inflation has been high and unemployment has been low. Soft landings represent a kind of triumph of hope over experience. I think we're very unlikely to see one. I think there's a very high likelihood.
So again, what's going to happen here? Is your investment fund going to be healthy? Is it going to be negative? Are you in retirement right now? Is this just all very depressing to have to hear about? And what's going to be done about the increased cost of things? Still very much a lot of uncertainty out there, and I think people are going to take this with them into the election in November. So if there's not a dramatic turnaround, we could see these problems continue into the future. 217-629-7970 is the phone number. Good morning. You're on WMAY.
Hey, good morning, Greg. Hey, crypto took a beating. Real estate went okay as long as your renters were paying you. Precious metal, that's doing pretty good if you got into gold and silver. Stock market 401ks are going to take a hit. It's kind of like 2008, 2009. I still got friends that couldn't retire and had to keep on working because they had to wait for balance to go back up.
Yeah, and it's all of these factors that you laid out there. Stagnant stock market. If it's down, it's going to impact investment from businesses and possibly even impact the job sector. And that's something else we saw reported by a group at Lensa. They actually put Illinois at a unemployment rate of higher than the national average when you get to the issues of whether or not we're going to see increased unemployment. And the studies are indicating that indeed Illinois lags the national average, and we could see increased unemployment over the years if indeed the economic indicators are what we're seeing in the tea leaves. So yeah, diversifying your portfolio, I think, is one thing that you're laying out there. It's important for people to investigate.
Could you imagine when all the college loans, if they just default on that and say, no, you don't have to pay it, and all the bubbles start to burst on that end? We're dealing with hyperinflation here at this point. I mean, the Federal Reserve, they've inflated our money, and the Fed. That's all I can say. Thanks, Jeff.
I appreciate the call. And I don't know what the actual definition of hyperinflation is, but 9.1% over the year, when it accelerated from 8.8% the month before, and you're looking at fuel oil prices up nearly 100%, yeah, that's going to impact a whole bunch of things, including hiring. And again, this report from Lensa shows that in the next few years, Illinois could see its unemployment rate increase up to 6.1%. Which is obviously not something that you want to have happen in the land of Lincoln when we've got just incredible resources available, awesome infrastructure, energy that's available if it's allowed, and a breadbasket of sorts here in the heart of the Midwest. But a lot of policies might drive things in the other direction, so we'll be watching all of that closely. It is Springfield's Morning News. I'm Greg Bishop on 92.7.